Hi traders and welcome to the Technical Analysis Market Watch on Friday the 14th of April. So I've seen some big moves in some of the key indices and the currencies this week. We've seen some momentum really kick off some support levels and resistance levels in some cases. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, and you can see we've seen a big move out of this support zone here. We had support at around that sort of 66.20 area, and you can see that the MACD momentum has really shifted. You can see that we've got a peak that's a lot, or at the trough really, that's a lot closer to the zero line, and price hasn't really changed much. You can see from there to there that the MACD has definitely started to improve. So the 12 and the 26 are getting closer together. And yeah, once we saw that break of the 20 moving average and the 50 moving average, now it's well on its way, and nothing short of an extraordinary reversal will stop that daily candle from closing well above the moving averages. The problem that I see for the Aussie USD though in trading it forward is that you've got resistance in front of you very, very close. So you've got the 200 moving average, which is not very far away, that we know that it respects quite strongly. We've also got this very strong resistance zone at around that sort of 66.50 area. This red line here, you can see that we've got support right through there and right through there. And it was also resistance at this point here. And this is the second base of a head and shoulders. I mean, we've got a head and shoulders pattern right through there that played out perfectly. You can see that head and shoulders there. That was the base neckline. And same deal here. You've got the same base neckline for the head and shoulders. So we'd almost be expecting that's going to be resistance and going to be a problem for it to get through in the first instance. Doesn't mean it's not going to, but there is going to be a few issues there more than likely. So you don't really want to be trading into a brick wall. So if you are going to trade the Aussie long, you really need to be looking for opportunities that are going to be in this zone first, and then look at it and say, well, if it gets past that level and then test it from above, that's a different story. Then we're going to move over to the next level at around the 70 cent mark, which is obviously a very big key level for it. But if it fails at this point here and finds that resistance too strong to get through, especially in the first instance, the first point of your reversal really is going to be that 67.20 area, this red line here. That's where you really want to be playing the game for your shorting opportunities. And that should coincide, if it happens fairly quickly, it'll coincide with a 20 moving average as well. Failing that, if the 20 moving average crosses above there, that will be your target. So if it does find resistance here and starts to reverse, the 20 moving average will be the target for that one. But big move out of this area though. It has been pretty strong. And we've just got to be very mindful that the resistance is not very far away. So yeah, keep a close eye on that one and keep your trades relatively short until we get past that's all important 68.50. Then we can start targeting the 70 cent mark. And the reversal, of course, is back down to that 67.20 mark. All right, we'll move over to the US dollar CAD now. And this one has been a real strong sell-off this week. You can see and it's set up pretty well, really. You can see that we've got an evening star pattern here. I was talking about this earlier this week as it was setting up. It wasn't quite an evening star pattern at the time. But yeah, look, no question, we had the short candle there, the shooting star candle, basically moving over to the 20 and 50 moving average. And also, just as importantly, though, the roll reversal zone. You know this level is a very important zone by the fact that it's found support and resistance several times. Look at all the support right through there. You can see that support line was very strong, resistance there as well. No real surprise to see it break through, test that support zone there, and come back and test the resistance from above, right? So it was a pretty good trade, really. I mean, I think I did my main trade on it this week for the move down to the 34.20 because that pattern looked very strong, but it has continued on. And really, when you look at it from a standpoint of a longer term time frame, you can see that we've got a series of lower highs and lower lows well and truly in play now. So this is in a dead set downtrend on the daily chart. So we know that's a pretty big deal. It's fast approaching, though, where you would expect strong support's going to be. Like around this level here, I'll mark it up with a horizontal line. So this is the level that we're pretty comfortable that we know we're going to find support. Like we've got, resistance through there. We've got support there. And we had a little bit of support here at the 200 moving average as well. Didn't quite get there. It's probably a little bit higher than it is there, actually. It's probably around this level here, really. That's where the support is. Now, yeah, it's not very far away from that. Like you're talking about a 132 sort of 60 area. That's the area you'd be targeting now if you're going to continue on at the short. There's probably no real reason why it wouldn't get there. I mean, it's got enough momentum to actually push down. And there is a little bit of short-term support right where it's at now. Like if you draw a preliminary horizontal line there, you can see that you got support through all of these areas here, and it did bounce off that level. So this is the level now that it must break through. If it breaks through and closes below this level, yeah, 132.50 is going to be all but touched, mainly because of the momentum gravitating to it. Like, you can't really, it's hard to stop momentum falling that quickly, and the only way it's going to stop is if this level holds up. If we don't get a hold at this level, you'd think it's going to gravitate down to the 132. Now, if you're looking for an opportunity to potentially go long on it, this is potentially one. I mean, if it does turn around from this point here, I would respect that because of the levels that it did hold here for a long time. You got a lot of daily candles there that were closing around this level. So look, most likely, if it does turn around at this point here, the first point of call is going to be that 134 sort of 20 area. Then the moving averages, which are around that sort of 135, or they'll be a bit lower than 135 by the time it actually gets moving up there. But realistically, the very strong level is down at 132. So we'll keep a very close eye on it. All right, we'll move over to the US dollar yen now. This one hasn't really moved. This has probably been the slower of the majors, really. It hasn't really done a hell of a lot this week. You can see it's been really trapped in this zone. But look, in front of it, all you see is problems. I mean, realistically, yes, it found a bit of support at that level, as you would expect, at around that 131. You can see we've got lots of touches there of that point. But now it's still sort of hovering in that zone where there's three moving averages all basically moving sideways. So there's a lot of issues for it moving forward. It needs to break these levels before we can take it seriously. Like, really, when I see all of that congestion, I'm sort of thinking that it's got more likely a move short than it has a move long. But I wouldn't really be trading that until I actually see it. Look, if we get a daily close below 132, then we can start targeting the 130.80 area, which is the previous support. But yeah, realistically, it has to close below those moving averages in order for that to happen. And if we see a daily close above the 134, which is around this level here, above all of the moving averages and around this little mini zone, the first target's going to be that sort of 135.30 area, and then up onto the 137. But it's got a bit of work to do before it does that. So really, we'll have to wait. It's a bit one of those ones where you really want to wait and see. It's a very congested zone here. We need a break below 130.20, or 132.20, sorry, or a break above 134.20. And if we get that, then we can aim for the next resistance or support zone. So really, it's a bit of a guess and check. There's not much going on. It's right in the middle of those moving averages, and that's always a pretty, range-bound, hard level to break until it actually does it. Very difficult to predict. All right, over to the dollar index now, and look, this one's well and truly trying to sell off. It's at the absolute last level of support now, but realistically, that was only one candle anyway. The support that we would be really concentrating on has been broken, and that was around that 101.30 area here that you can see. Look, it's definitely trying to go down. Look, and it's done all the right things. It's had the sloping head and shoulders that it broke through, came and retested that neckline from below twice. It touched the 20 moving average. And look, if you look closely enough, it's been technically perfect, this one. It's even got a bearish Harami pattern there that has already actually played out. Like, that was only a couple of days ago, right at a 20 moving average and a pullback to the neckline, the down sloping trend line as well. So, it had a lot going for it, especially after this candle happened. It pulled back up to there. That was a very negative sign for it, and it certainly continued on. But of course, the trade there is Euro USD, so we'll jump straight into that. You can see we've broken through now. We came back and tested the 20 moving average, right on the money onto the 20, and then off it went. Once it broke through that zone there, the level it needed to break was this top here. Once it did that, we've got the confirmed lightning bolt again, the second lightning bolt off. And realistically, from 109.80, this was a trade. So if you were there at around that time, you should have been able to get a hold of that, because we talk about all the time. Now, look, this is the if we can hold up here, look, it's definitely, at the moment, it's trading above it. And if we can hold above here, it's going to bode very, very well for a move up next week. But it needs to close effectively above the 110.50 area. If we get a close above 110.50 by the end of the week, and we're starting the trading week there next week, we're looking at probably moving higher to the next serious zone, which is around the 111.50. I'll pop a horizontal line there. That's the area. You can see it's very strong support and resistance. That's the area we'd be targeting straight up, and it's still a good 100 points away, which is pretty good, but really depends on where we close this week. Okay, so if we pull back again, the 20 moving average is going to be the obvious target, but you can see when you look at it in that context, it's a very strong lightning bolt and very, very strong momentum. So realistically, as long as we get it close above 110.50, that momentum should continue, and our next target is 111.50. Failing that, if we start to reverse around this point here, we see a couple of lower highs and lower lows on a smaller time frame. The 20 moving average will be the first trade, a scalp down, but I wouldn't be aiming for anything past that because really we don't want to be trading against a very strong trend. Okay, and the S&P 500, of course, looking very strong now. You can see it's been trending up. It did all of the sideways action for a week and a half. It's trying to play its hand now. If we get a daily close above this level, then we know that we're in for a pretty reasonable move. The next real level is the 4180 level. That's where we're really targeting. It's not very far away from that. It's only 40 points, but it's still a good scalping opportunity. All we're looking for is a small pullback on a smaller time frame to get to that zone, but it's trying to break this. But this daily candle hasn't closed, and probably the one at the end of the week is going to be more important anyway. But realistically, if we get a close above this level and above this congestion, the next obvious target is the 4180. I'd be very, very conscious of that being a very strong level though, and that would be my first target for a short-term scalp. Okay, that would be the very first target. Let it break that through before we start going any longer than that. I think that's probably the best way to play that one. If we start to reverse through here and we don't reach that and we see weakness prior, and next week we don't get to that point, then we're going to be targeting the 4080 again, which is the support level. You can see it was resistance right through there. It's a pretty important level, and it will also be the 20 moving average at that point, because I mean the 20 moving average is going to move much past that prior to the end of the week. So pretty tight range, really, 100 points all around. But I think both of them are reasonable moves, but definitely the momentum is with the upside, and the 4180 is a likely target for the up. And a small reversal would see us back down to the 4080, and that is what we would be targeting. So we've had a great week's trading. It's been a really good move on a lot of the things that we watched. So hopefully you're able to take advantage of some of those, because they were quite technical. We should be in for a pretty good week next week, because these ranges are about to get broken, and when they do, the trends should really start. So have a great weekend, and I look forward to seeing you all next week.